In this video, traders, we'll look at a short-term Bollinger Band strategy for a 1-hour Forex chart. Stay tuned. Hey traders, a very warm welcome to you. So this is a short-term mean reversion strategy using Bollinger Bands on a 1-hour time frame. Let's look at the rules, let's look at the strategy, and let's look at the whole thing and see if we can implement it ourselves in our own trading. All right, so mean reversion trade, we're on a 1-hour chart. We need Bollinger Bands set to a 50 period EMA and a 2 standard deviation. So most Bollinger Band settings normally are 20. We're adjusting this to 50. 1-hour chart, giving ourselves a little bit smoother, less signals, but more reliable potentially. And an RSI on a 9 setting. This is kind of complementary to pull the trigger to the trade. All right, so before we move on with the rules and the exit strategies and what have you, this is a mean reversion strategy. So you can help this strategy by picking stuff that is in a mean reversion phase. So a currency pair like US dollar CAD, if that's mean reverting at the time or in a range bound environment, that's gonna help. Plugging this strategy into the right environment will help lots. So you don't want something that's just ripping off and has been a monster trend for a long time. Ignore that pair. Look at pairs that have been sitting around in ranges for the past quarter, the past year, and bolt this into those. Depending on obviously when you're watching this video, that might be a different pair, but that will give you a better chance of success with this strategy. All right, let's look at the rules. So for the short side, we are going short if the price high, and I need to just put that there if I get a purple pen as well, make it a little bit easier for us. If the price high is greater than the upper Bollinger Band, I'll illustrate this in a second, and the close of that candle, of the signal candle, is less than the upper Bollinger Band, and the RSI is greater than 75, we're selling short on the next candle open. So if we have this scenario here, right, we have our Bollinger Bands here, and then we've got our mean here, so our 50 period, we've got a 2 standard deviation. What we want to see on the signal candle is this. We want to see price do this. Okay, we want to see the high breached, right? We want to see the high breach, which is this. So the high of the signal candle is above the upper Bollinger Band, but it closes below the Bollinger Band. So in this case, if there's a green candle, obviously that would be the close there. There's the high there. That's the important thing, guys. If it's closing above, we don't want it. We're not going to get involved in it. We want to see it poke above, but come back. That's the key thing to this, right? That's the signal candle. That says, hey, we've done the first part of the filter process. What's the next part? Next part, pretty simple, guys. RSI has got to be above 75. We know the score with that. Just make sure you're on a setting of 9. We're looking for it to be in an overbought condition, which is above 75. Overbought and that signal. Then what do we do? Once we've had those two filters, we look for the trigger. The trigger is going to be, or the entry, should I say, is going to be selling short on the next candle open. So we're in an hourly chart, the next one opens, wherever it may be here, there's our sell short entry, and we're in the trade. Now, stop losses and targets. Stop loss is going to be 50 pips above your high of the signal candle. So your last signal is going to be wherever it is, your close below here, or if you've closed here, wherever it is, it's going to be 50 pips above. So decent size stop, but don't forget this is a swing trading kind of strategy on a 1-hour chart, and you're looking for a decent amount of move. Now, adjust this as you see fit. If you think 50 pips is ridiculous, it's up here because the average range of a 1-hour bar is smaller, then by all means, tighten it up. The point is you just don't want it going back above that top high, and give yourself a little bit of room for noise. Okay, your first target is going to be the middle band, or should I say the moving average. The 50 period exponential moving average will be your first target. Your second target is going to be your lower band. If it doesn't get to your second target, you want to look at some strategy for trailing your stop. You want to make sure that you're bringing your stop down. Perhaps if it gets to the middle band, then you might want to move your stop to your entry point. If it starts going in the lower territory, maybe you want to start ratcheting your stop down as well with that. Okay guys, that's an interesting strategy. Let me know how you get on with it. It's a mean reversion strategy. Don't forget you're on a 50 period, not a 20, which is normally default. Don't forget your RSI is on a 9. It's normally on a 14 as default from the charts software. And you are on a 1-hour chart. And like I said at the beginning, you will have much better success with this if you bolt this into a market conditions that are already in a range bound mean reverting environment. This will help you way better than a trending environment. Because a trending environment, it will hit that top ball Molly, it will just keep going and going and going, or it will close above and you'll get all these false signals that you're not going to take anyway because it's closing above. But this will allow you to look for those stretch, just a little bit stretched, a little bit stretched, try and catch those extremes. And by the way, obviously we're just reversing it for long. To go long, we're doing exactly the same thing. The only thing that's changing for us is that the price has got to be lower than the lower Bollinger Band, so down here, and the low has got to be lower, and the close has got to be above it, as we know, and the RSI is going to be, instead of being above 75, it's going to be less than 25 of that oversold condition. Then we're buying on the next candle open. So we're just flipping the rules on their head. Targets exactly the same as before. Okay guys, thumbs up if you like this kind of stuff. See you next one. Take care. Bye bye.